Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. Sign up for a 1-week free trial, no credit card required, for access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Looking at XLK, Apple, and Facebook, bulls with a new all-time high. Nice strong end of the day for XLK. Volume was way off on the entire market as everybody's just waiting for the FOMC tomorrow. Not a lot of action going on, but one of the opportunities that there was in the tech sector the second half of the day, where the bulls did close strong with continuation of higher highs. So the bulls in full control overall for XLK, and keeping an eye out for the upper Bollinger Band resistance on the weekly time frame. We rejected from that a few times in the past few months. That's at 59.29, high today 59.17. So we are right there. So we're going to have to close above the upper Bollinger Band, which we haven't done in about 3 months, if we were going to see continuation from here. And we're going to have to see volume behind that move. Bullish MACD cross following through after multiple rejections, and just slow and steady getting through that area where we need to see that cross. So bulls in full control. We'll see what the FOMC tomorrow at 2 p.m. Eastern does, but as long as this low of 58.35 holds, the bulls keep in full control with higher lows and higher highs. Apple on the daily time frame, multiple inside bars and still building a base at 158. So again, it's a good job of building a base of support, but the bulls aren't doing anything to follow through off of that level. So with multiple inside bars, a bear break is 158.44, in which case we'll be looking down at 157.91. Bulls are looking for a break of 159.77, in which case we'll be looking up at 160.97. So multiple inside bars, tightening range between the middle Bollinger Band resistance and the 50-day moving average. And if we trade sideways a couple more days, then those moving averages are going to be relevant as they squeeze. The weekly time frame is healthy consolidation still. There's no red flags. So even though the daily time frame has shown weakness after that conference, really the weekly or the daily time frame, the weekly time frame is not going to see weakness unless we break 155.11. And even then, after how many times we just grinded across this middle Bollinger Band, we know that's a key level the bulls need to hold, and that's approaching the mid 150s as well. Facebook, good save by the bulls because we were close to a breakdown. That was not the candlestick that the bulls wanted to see yesterday, and a close below the middle Bollinger Band and a break of 169.55. So we didn't break by much. We only broke by 21 cents, but the fact that the bulls showed right back up today and closed at the high of the day is a really good save by them. So we're looking at the next resistance after 172.56, looking at a recent high of 174, and then the all-time high. So it is very easy for the bulls to turn things around and keep this strong pattern as the weekly time frame shows that strength bouncing off the exponential supports, and just looking at our high, higher low, lower high, higher low, just getting really tight here with a range of 169.34 and 174 to be watching on this weekly time frame. And I do believe we're going to see a break in the near-term future in Facebook. The market strength indicates that the all-time high is likely to come, and we'll just have to see it follow through at this point. Netflix is another tech name that's also pretty close to an all-time high with a lack of resistance. So I appreciate you watching. We'll check back in after the FOMC and see how that plays out. Hope you have a great night. We'll see you tomorrow.